time, there's gonna be days where you gotta fall asleep at your desk. You gotta fall asleep on your computer studying, putting in that time. And that's when you're gonna get what it is that you truly want. And I'll leave y'all with this just before we dive into the technicals of it all. Like, why do you deserve to win? And there's millions of other people, if not scratch that, billions of other people that's struggling, right? What is it that you do, and what is it that you are, or what type of effort are you putting in behind the scenes that warrants you the success that you're asking for? Because at the end of the day, it don't matter whether or not you work in construction or you sitting here at your computer making money. It's like it's going to test you in different ways, right? So again, we just pushing buttons, but it's a lot deeper than that. You know what I'm saying? There's a whole spiritual change that you got to overcome to really make it in this industry, right? So when I do my weekly outlooks, I pretty much like to start, going over some quick recap of a couple trades I took last week. I'm going to teach y'all some things that I really don't I'll be honest, I don't like teaching this publicly. Some of my students going to be mad at me for teaching y'all this stuff, but, I'll give y'all some free value today, right? I have coined my own strategy, the hezzy crossover, right? Now, when it comes to learning and, developing a technique that works for you, a lot of things y'all got to realize is more about interpretation of the information, right? A lot of us are doing the same things and learning the same strategies, but if you can't quantify what's happening in your brain, right? If you can't actually understand the verbiage and the terminology, you're not going to get the same results as somebody else that may actually understand that, right? And one thing I couldn't stand about this industry is there's a lot of people that just want to sound super smart, right? And you might be familiar with liquidity concepts, you might be familiar with ICT concepts, whatever, and they're using all these big words and stuff just to sound smart. But at the end of the day, if you like me, you just want it simple, sweet, to the point, right? So I was able to make this thing super simple without taking any shortcuts, right? And that's my goal for all of you guys today, is to make it super simple and easy to understand, easy to dissect, while I'm also not taking no shortcuts, because that wouldn't be beneficial to y'all neither, right? So again, let's go straight into it, see some of the setups that we took last week, right? When it comes to, my pairs, I'm very heavy on Nas, Gold, EU, and GU, right? If you see me trading anything outside of those four, it's probably because the market just ain't moving and I need to actually, take my money somewhere else and try to invest it there. But very simple, indices. One thing you want to understand when it comes to Nas, US 30, SPX, those types of things, indices, they're going to be bullish 80% of the time, right? If I just go back over the years and just look at these charts, even when they have large dips, right? I got a lot of shit on my computer, excuse me, because I mark up a lot. But if you just go look at the higher time frame, you realize the market is always in an uptrend. Even when it's in a downtrend temporarily, you need to be looking for ways to target higher prices and looking for a place to get in to ride the market higher, right? So, last week we had several good, opportunities. FOMC, we was all on top of that. That paid me very well. Had a pretty large day. I don't know, I'm pretty sure some of y'all follow me, a lot of y'all probably don't, but you can see the trade I took on my page there if you want to see it. Had a pretty good day. I would say. But anyway, getting back to it. One thing I like to look for is, sweep of previous days, previous week's lows. All right. And this is simply put, just because when you're looking at the market, and you're looking at orders that are being put in, okay, every time somebody takes a buy, every time the market pushes up, okay, there's a lot of people that are chasing these positions, right? And when they're chasing these positions, that means that they're entering the market and they're putting their stop losses beneath these lows, all right? So what I like to do is understand what everybody else is doing, and I try to exploit that, right? So I'm always looking to get in underneath where most other people get in, because I understand that's where most of the orders are, right? So I'm going to draw this line out right here and draw that into the future. As the market makes a new high and it starts to retrace, I'm already anticipating where the market might go in order to give me a reversal, right? Because every time we take a trade, essentially we're looking for it to go in the opposite direction, right? Whether it's a higher time frame, lower time frame, continuations and reversals are the same thing, just happening on different time frames, all right? So I'm looking for the market to push down here and then reverse. One thing that gives me a clear indication on what's going to happen is seeing stuff like this, all right? And it's going to be super easy for y'all to follow if if you really getting into the price action of things, right? So when I saw this low get created, this was right before the news, right? This was literally right here. This is when the market started pushing up for news, right? For FOMC Wednesday. All right. Started pushing up right here. And a lot of people probably started chasing the buys, right? Because they see these two big bullish candles, they chasing the buys. I'm like, okay, bet. If they start chasing buys here, I know the market's going to drop before it really takes its direction. Now, the thing I got to realize about news is a lot of times the market will start going in the direction that it actually wants to go long term. It'll start off going in that direction, then it'll reverse, right? And go the opposite direction of where it really wants to go. So if we paying attention, the market starts going bullish here for FOMC. I already knew that the market would come and grab this low and grab this low over here simply based off of the way that this low looked, right? If we just really looking at the candlesticks within this structure, this doesn't look strong. This doesn't look very convincing, right? So if I see a low that doesn't look strong and convincing, in my opinion, I'm going to look for that low to get destroyed before I get into my buys, right? And this is the place where a lot of people make mistakes because, again, if we see the market pushing in one direction, a lot of people they're going to chase this buy, right? A lot of people are chasing this buy. But if I'm looking in this area and I don't see strong candles, and if we look at this, you see how small the candlesticks are? You got tiny candles, tiny candles. Now, if these candles are small, where am I supposed to re-enter? Right? Because we want to re-enter off of things that we call imbalances, fair value gaps, and order blocks, right? Engulfing candles. We want to enter off of large, strong candles, right? So if I don't see a place for me to draw a demand zone, if I don't see a place for me to draw a zone for me to possibly re-enter, I'm not looking for a higher low at this point. I'm going to look for a lower low, and then I'm going to get in down here. All right. So that was the main giveaway for me is I see the market pushing up, but again, these lows look weak as hell. So if I see that, I know I'm going to get a fake sell-off, and then I'm going to buy. So if you guys are in my personal community, you already seen this. We took sales up here. I already knew this was a fake out. I took sales up here, right? And if you, again, now, like I say, I'm not trying to toot my own horn or nothing like that. I don't care, but I just like to show proof of concept when I'm talking about what I'm talking about, right? This is my Instagram. If you guys go on my Instagram and you see my most recent post where I make like 8K or whatever, the first trade I took, I closed it for like $3,200, right? Before I got into the buys down here. And you can go and check the price, right? The price was around here for that particular sell entry. So it's like, how did I know that the market was going to sell from here, all just to reverse and go back up from here? It's just understanding, okay, how liquidity wants to form. Once I understood that, I'm like, okay, bet. If we cutting interest rates, that's a good thing for the market, right? They're about to turn on the printing machine. You got to understand, like when they start, printing money, okay, and interest rates go down, that means the markets are going to go up, right? Particularly stocks, crypto, gold, etc., stuff like that. So me understanding that this is a good thing that's going to stimulate spending, stimulate purchasing power in the economy. Maybe not purchasing power, but it's going to stimulate purchasing in general because the more money they print, it ain't going to necessarily make your money stronger. But, at the end of the day, when these companies look at their earnings report, it's going to be higher. So that means, again, industry should go bullish. Now, again, me sweeping lows over here to the left was a clear indicator for everybody that got in early that we should knock those people out. Now, the reason this is important is because every time somebody take a trade, you got to have somebody on the opposite side of it, right? So in order for a large bank institution or a hedge fund to make money, that means an equivalent amount of people, right, and dollar amount have to lose, right? So if JP Morgan wants to take a trade right here worth $1 billion, let's just say $500 million, that means you got to have $500 million worth of losers on the opposite end, right? That's why a lot of people lost by buying here. A lot of people lost by buying here when the market first, when the news release first released, right? So between these stop losses being hit and between these stop losses being hit, they gathered all that money. Because what you got to realize is, I want you to imagine your phone. This is your phone. This is your MetaTrader, your app trader, whatever app y'all trade on, right? This is the app. And you got a whole bunch of virtual money inside of this app, all right? Now, when you push a button, when you push buy or sell, the money goes from being digital money in this trading app, and then it goes into the Forex market, wherever you set your stop loss. So you got to assume that there's millions of people across the world that are all trying to get into the same order. So if they all trying to get into the same order, how does JP Morgan and Chase and Goldman Sachs, how do they take trades? The only way they can fulfill their large orders is by taking the money from you in order to fulfill their order. Understand? So they're going to create patterns prematurely. Okay. And when they create these patterns prematurely, again, your money goes from your cell phone straight here to this low, or right here, excuse me. So understanding that, you got to assume that you always too early, right? Like if you just assume that you too early, you'll be all right. All right. Like more likely than not, you too early. Drop a 7 in the chat if you done took a trade, it hit your stop loss, and then it took off in the direction that you thought it was gonna go. Right? Everybody can relate to this. And if you ain't dropping 7, you probably new to trading. But if you've been trading any period of time, then that's happened to you plenty of times before. So again, if you just assume that you're early, you're gonna be straight. I have a 2-level liquidity rule. All right. I have a 2-level liquidity rule. If I don't sweep 2 levels, I'm not getting in the trade. Okay. So you see how I got money underneath this low? And I can go over here and I got money underneath this low. Right? If you guys go back and back test this, I guarantee you, you're going to see a whole lot more accurate trades. 2-level liquidity sweeps is the key, right? Now, here's the thing. One thing I got to realize about smart money and liquidity concepts is, like, I've been trading for 8 years. When I came into the game, people were still trading support and resistance. People were still trading trend lines, right? Nowadays, in 2025, a lot of people are being introduced to trading by learning liquidity. They coming into the market learning ICT. They coming into the market learning these more advanced concepts. You understand? So what y'all got to realize now is that what used to be smart money is now the new retail patterns, right? What used to work in terms of liquidity sweeps and stuff like that, now it's not working no more because now everybody else is trading those patterns. Understand? So now if everybody else is trading those patterns and the big banks have to take money from those people in order to win, that means now ICT doesn't work the same that it used to. That means now that, looking at normal liquidity sweeps and stuff like that, that don't work the way it used to. All right. I'm gonna prove my point right here. This is another trade that we took. I want to say this was what, Thursday, something like that. So now I look for something called traps. And after I get into this, I'm not gonna go too deep into the hezzy crossover sauce. I'm gonna be honest. I can't give all that away. Like can't give it all away. But if y'all start looking for traps, you'll be all right. All right. So we took some shorts on Nas last Thursday up here, right? Now, if you would have asked me 4 years ago, okay, this high, we create equal highs right here. We come and take the equal highs out. and then you start pushing lower, right? 4 years ago, this market probably would have dropped from here. Nowadays, we looking for traps. All right. So again, I need to see my second level liquidity sweep. This was the first level. This was the second level. Now this is why you see in a reversal take place. Right. So it's not enough just to wait for equal highs to get swept and then try to get in. That's why you still losing. Right. Start looking for two level sweeps and look at the first level, the first sweep as a trap. Now, if you miss the trade, you miss the trade. I'm not telling you you're going to catch every trade the market gives you, but it's just going to give you a higher probability of not losing, right? Pretty much. And then you see the market pushes down, weak lows here. Understand it's never just going to reverse off the first reaction. So continuations we took here and wrote it on down. And then after that, the market ends up reversing, right? So little key indicators like that are things that's going, help y'all really take y'all trader to the next level, right? Now, again, what's the market going to do this week? That's pretty much why we are here, right? I'd like to give y'all a little wisdom and understanding, because at the end of the day, if you just come in and you're just looking to push a button, like you ain't gonna have the understanding to be able to duplicate this and replicate this for years and years to come. So that's why I enjoy teaching, right? I've never just been a guy to just send setups and randomly and not really kind of get y'all an understanding on why. So here's what it is that we got now. All right. Obviously, we broke and we made new highs, new all-time highs. Before we made new all-time highs, what happened? All right. You come down here, we got large body candles, right? Nice bullish engulfing candle. On top of that, we got some hesitation right here. Now, without saying too much, this is a hezi crossover. All right, simply put, hezi crossover is the technique that I pretty much like. Not even pretty much. I created it. All right, and I created it based off of this. All right, I'll give y'all this. All right, I'll give y'all this. This is all you really gotta look for. If you look for this, you'll be all right. If the market hesitates before crossing over and breaking a new high, okay, you can use the hesitation as a vantage point on where you're going to get in on the continuation. All right. Now, on the flip side, if you see the market just impulse up with no hesitation whatsoever, then the market is not likely to reverse right here. All right. If there's no hesitation, this is more than likely going to be a trap, and the market will keep going lower. I'll show you guys examples of this after we look at nods. All right. So this is something I just noticed off of years of chart time. Whenever I see the market pushing to make new highs, I need to see hesitation take place first. Once I see hesitation take place first, now I know that there's internal liquidity. Okay. Why is internal range liquidity important? Because now this tells me that we got some money, all right, waiting for us right here to fuel our next push to the upside, because that's what liquidity is. It's fuel that the market needs in order to continue in the one direction or another. Now, if there's no fuel right here, if there's that little slight hesitation that we see, these little candles that took this little pause, those candles is what's going to allow the market to keep going higher. If the market just shot up and it did not have this, then this buy would not happen this week, all right? Or at least not when I think it's going to happen. I'll give you guys a prime example of this, okay? If we look at what happened for GU, okay? GU on Wednesday, okay? Shout out my homegirl Autumn too. She sniped this bad boy. I was in Nas, so I wasn't even paying much attention to it, but she took the concept, was able to work it, got a nice little bag off this trade, right? So again, you see the market push to make new highs, right? But there's no hesitation within the impulse, okay? No hesitation within the impulse. If there's no hesitation within the impulse, it's going to be a reversal, plain and simple. And that's all you really got to do. And this is going to be key for y'all, because this is the hardest thing to identify when you're trading. Hardest thing to identify is this a new high that's going to continue, or is this a liquidity sweep that's going to reverse? These two things are some of the hardest things to identify in trading, okay? Because it looks similar. Like, if we being real, before this happens, before the next move up, they look very similar, right? They look very similar. And when you see these patterns, you like, okay, what the hell is going to happen? Is this a new high, or is this a sweep of liquidity about to reverse? Same when the market's making a new low. Is this a new low, or is the market just sweeping lows and getting ready to reverse? The way you tell is by analyzing this area here for hesitation. Analyzing this area here for hesitation. No hesitation, you ain't got to worry about it. If there's no hesitation, it's a reversal. If there's hesitation, it's good chance it's going to be a continuation. All right. Now, just take that with you, back test it, learn how you learn. And, like I said, put in some time. And when you back test, you really got to put the work in, bro. Like, don't just look at two examples. Like, that ass, go back, zoom back, look at the last 50 to 100 examples. That's how you really put in real chart time. You know what I'm saying? So, again, as the market's pushing up, we consolidate before we make new highs. Now, what do I see happening? I know, and the good thing about understanding these patterns here is that now I know the market at least is going to come down to this point. Now, if I know the market's going to come down to this point at least, what can I do in the meantime? Right? What can I do in the meantime? I could actually sell down to this level, right? And now you could play ping pong with the markets. Markets go, like, you could sell down to a certain level, buy up to a certain level. Because now that I know the market has to come down to this internal range liquidity, now I could actually look for some potential sell opportunities as well, right? And what am I going to look for to find a sell opportunity? Same thing, just on a lower time frame, okay? Same thing, just on a lower time frame. So let's check this out. What the market do right here? Before it breaks this level, it hesitates, okay? Hesitates, then it crosses over, right? So boom, I got my hesi crossover right there. I'm gonna mark up the top of that level as internal range liquidity, right? So now I got the market pushing up here, all right? And now I still need to see a pattern, don't get me wrong, even once we get up here, but I can see it pushing up here and possibly reversing, either from here, or if the market wants to just go a tad bit higher, I'm open to this, okay? Reason why I'm open to this high up here is because when I analyze these candles, I don't see a lot of, volume and volatility within these candles. I like to see, like I said, order blocks, imbalances, fair value gaps, large impulses, right? You got a little impulse right here, so that could be enough. But at the same time, I'm paying attention to this, like, okay, the market could come here. Now, the reason this is important is because I give myself more than one opportunity, right? Like, if you trade it live, again, if you just taking signals, that's one thing. But if you want to be like a real professional trader, right, it's not just going to be one and done every single day. Like, there's times where, like, I look at this like a game. I look at this like sports, right? Football on right now, right? I'm missing a game just to come rock with y'all. You know what I'm saying? In football, and I like using this analogy because I used to play D1 ball. So this is the way I make sense of it. We get 3 downs or 4 downs to get a first down, right? So why, like, if you're looking at basketball, the best shooters in the world, they shooting 35, 36, 37% from 3, right? If you're looking at baseball, the best hitters in the world, they get on base, 3 out of 10 times, they batting 30%. You know what I'm saying? And these are some of the best athletes in the world that they craft, right? So why, if trading is a game as well, essentially, trading is a game, why are you only giving yourself one chance to win it all? You know what I'm saying? If the best athletes in the world, if the people that's mastered their craft, if they not even held to that same standard, why are you holding yourself to that same standard of only taking one trade, and if you lose, you out the game. Don't think like that. You know what I'm saying? I give myself 3 opportunities every single morning to make money, right? And then on top of that, my stop losses be so small that I could take 2 losses. On the third one, I could win and still make significantly more than what I lost on the 2 losses, right? Because I'm getting anywhere from 1 to 5, 1 to 10, 1 to 15, right? I get 1 to 20, 1 to 30 sometimes. It just depends, right? So if I know I can take a trade and make 15 times what I risked, why is you tripping about losing 2 trades? That don't even make no sense. Why would I trip off losing 2 trades if all I need to do is win one and I could be up 15? So even with my 2 losses, I'm still up 12, 13. You feel me? And that's how this thing works. This is how I'm able to make money regardless of my win rate. You know what I'm saying? I don't care about win rate. I care about profitability because there's people out here taking 1-to-1 trades and they can win 80, 90% of the time. But guess what? If they're going to losing streak, it's over with. Right? Me taking 1 to 10 trades, I can win 30% of the time and still make more money than a lot of people. Right? And this is the mindset y'all gotta have. Don't focus so much on win rate. Just focus on whether or not you're profitable. You know what I'm saying? Some of the best traders I know, they win probably 30, 40% of the time, but they risk to award is so fire, they turning up. Especially if you trading live. If you trading live, like I like doing stuff like, okay, I'm gonna just take this reaction and see if this reaction works. If that reaction work, boom, it's a 1 to 20. I'm taking this based off of these candles right here. I ain't taking it with my stop loss way down here. I don't like that. You know what I'm saying? Like that's how I like to trade live. Minimal stop losses. If I'm right, boom, my 10x, 20x my bread. You know what I'm saying? Let me see. Do I agree with it again when I said don't trade within the first hour? Yeah, that's facts. That's rules for sure, for sure. And like I didn't mean to come for it. It was just primarily the fact that I'm like, yo, this, we got a bunch of people in here. So it's like if that's the case, then you gotta let people know that. You feel me? Well, nah, that's standard. You know what I'm saying? Even during the day. If 5 p.m. come rolling around, 5 p.m. Eastern time, and you still in the trade, you gotta move your stop loss to break even. Or else you can definitely lose that trade. Because sometimes when spreads open up 20, 30 pips, you know what I'm saying? Those spreads get wide for about an hour every single day. So that's why, like, if you're not in deep profit, like if you ain't in profit 50 to 100 pips, like you better go ahead and move your stop loss to break even. You know what I'm saying? Or else you risk losing money. This been happening to plenty of my homies, and it's like, bro, come on, you knew this already. You know what I'm saying? Sometimes you just forget though. Sometimes people forget. So if I was you, I set a reminder, 10 minutes before the market closed, just to go ahead and make sure you're taking care of it. Let me check the chat real quick. Which time frames do I look at to mark up? Yeah, I understand. I understand. You say it's your third month. I got you. What time frames? I mean, I'll start on the higher, but when it comes to executing, I'm executing on like the 5 minute, 3 minute, 1 minute. You know what I mean? So like I'm in there, lower time frames, trying to get in and get out with the quickness. I partial out at 1 to 3, and then I hold for at least 1 to 10. And once I hit that, that's where whatever happens after that, I personally don't really care. You know what I mean? Like I love to catch more, but I'm not gonna, stress out about it. So far as GU, not saying you gotta take it, but again, this is a quick understanding about what it is that I look for. Again, hezzy with no crossover with no hezzy, right? Impulsive move with no hesitation. I look at those to make new lows every time. All right. So something as simple as that. I personally don't like trading Sundays, but I could almost assure you that the market's gonna probably make new lows, right? You gotta be at least 1 to 5 for me to take it. If it retraced back up here or something, I'll probably take it, 3, 4 pip stop loss. But anytime I see a market shoot in one direction without creating, proper hesitation, I look for continuations to take place. But I'm gonna just go over GU, EU real quick and gold, and then we'll call it a day. If there's anything else y'all want me to look for, feel free to, feel free to go ahead and let me know. But I'm gonna just stick with my pairs that I enjoy for the most part. But so far as GU, I'm looking for it to come way back down here. All right. If you're really looking at it, this is the last impulsive candle that hasn't been touched, right? So if we do have, that bullish engulfing little area imbalance right here. All right. And ain't nothing really came to refill that or rebalance that. So now that we got all this, space, all this space and opportunity, I'm looking for the market to pretty much come rebalance all of this out. All right. So there's no need in marking up every level. Only thing I like to do is I like to mark up like the lowest level of internal liquidity. All right. Now, why is this internal liquidity? Is because I got my range. This is my low. This is my high up here. And this is, a little area hesitation, right? That produces internal liquidity. You don't have to mark them all off because if so, you're going to mark off this one, this one, this one, this one, this one. You're going to mark every low. You ain't got to mark off every low. All you got to do is mark off the lowest one. And you know that the market should keep selling until you get to the lowest point of internal liquidity. Once you get down there, then you can switch your bias to start looking for some buys again. So since I think the market gonna come down to 1.3396 or so, somewhere around there, I definitely say you could keep selling if you see the opportunity to do so. Right now, once we get down here, I'm going to expect a reaction. Okay. Once we get to this low, I'm going to expect a reaction from here, right? Because they're going to try to draw in buyers, right? So again, remember, if a lot of people start buying, the money goes from the trading app to right here, okay, in the form of stop losses. And so I'm expecting a reaction around here, and then I'm expecting the market to drop, clear out those early buyers, and then take off from down here. All right. That's one thing I'd be looking for on GU. So we're gonna start the week off bearish. See the market start to consolidate down here around 34, 1.5, around that area. And then once it starts consolidating a bit, we'll see like one more aggressive push to the downside just to clear out this tiny little hezzy right here. A little bit of internal range liquidity. And once that goes, I feel like, the market will be free to, make its move to the upside after that. All right. So that's what I see happening on GU. Short-term sales, long-term buys. This will probably happen around either sometime Tuesday, maybe Wednesday. It might not take that long, but I definitely feel like tonight and tomorrow we'll start off selling. All right. Tomorrow could be a little more consolidation going into Tuesday, but tonight I definitely feel like it'll sell. All right. Same thing with EU, right? Not really seeing much, but again, I already got my level marked off here. This was my first level. Okay. I took some buys on this last week just to see what type of reaction I would get. Sometimes you need to take a buy to see what the reaction gonna be. Just because you get in a market don't mean it's gonna fly guaranteed, right? I seen the market impulse, okay? As I see the market pushing back down like the way it is, I'm like, okay, that's probably not gonna hold now, all right? And it's cool. Sometimes you gotta take that first jab just to see. And now that I'm feeling like it's not gonna hold, now I'm gonna go ahead and zoom out a little bit, see if there's an area that might be a little better suited, for what it is that I'm looking for, right? And for me now, I feel like it's just gonna be right here beneath this low. All right. So same with GU, same with EU. They're gonna move very similar. Once this low goes, I feel solid in what's gonna happen after that. All right. And again, this just goes back to my two-level sweep concept. We don't really have a second level that swept liquidity, right? At first, I was looking at this one as the first level. So we swept one level here. We still got to sweep two. Okay. So this one, that could be two, but at the same time, if we don't end up respecting it here, we most definitely gonna come for this low, and then that's probably where I'm gonna end up buying at 1.7. All right, 1.17. All right. So just keep your eyes on that. Same thing, short-term bearish, long-term bullish on Euro USD. All right. Now for gold, this one kind of broke my heart. I was in this. I took this just a tad too early. I ended up stopping out right there. That's where I lost like 900 messing with that. And if I would have just held, I mean, yesterday, like last Friday, could have been my biggest day ever if I would have had proper stop loss placement on this trade. Because that standard plus what I had already took, I think that would have put me at maybe like 18 altogether, maybe like 18 grand or something. It would have been one of my biggest days actually. I had a bigger day on a managed account, but just personal funds, that would have been my biggest day ever. So that kind of hurt, but it is what it is. What it is that I see happening now, just fundamentally bullish. Fundamentally, we're gonna keep going bullish. All right. Let me move this stuff out the way. Gold hasn't necessarily been my favorite as of late. I'm the type of guy I like steeper retracements. This is kind of moving like an industry right now. So I don't really look too far to the left these days on gold. I really just like to pay attention to what's happening recently, right? What's done happened in the past few days. And if we can pay attention to that in the past few days, we see, all right, lows get swept here. We push up, internally. We take out some more lows. We push up here, we respect here, we push up. Now, where have we not necessarily pushed back into? I see a sell to buy candle here, right? You see nice bullish engulfing, strong candle. Strong candle. We also got this wick right here. Now, what is that wick? Notice I'm on the 1 hour time frame. If I go down to say the 5 minute, that could be a little area hesitation, all right? Which it is. Okay. Little area of hesitation right above large bullish engulfing, right? So right now, I mean, I got it right here. But as I go down to the 5 minute, I can actually define this a little better because on the 1 minute, my line was here. On the 5 minute, I could see, okay, the hesitation actually drops to here, okay? So I want to get in underneath that hesitation. And again, gold is so bullish right now. This is a big if we can come back here. I'd love to buy gold at 36.52. Okay. 36.52 looks solid to me. All right. We got we cleared some orders on the lows before we pushed up. We hesitating off a previous supply, creating internal liquidity, and now we pushing up. Now we just got to try to find a way for the market to come back down. This is not a sell pattern, in my opinion. So I would like to see a little more. Maybe the market just range a little longer before clearing some highs. Maybe if I get a hezzy crossover to the downside, I can find an opportunity to sell and, catch the buy later on. But right now, it's too high to buy, and I don't see a price pattern that warrants a sell just yet. So until I get my sell pattern, I can take a sell because now I know where the market should come to. And again, this is a good way for you guys to trade in between moves. A lot of times people just wait for the main move, not realizing that the markets are fractal. So if the markets are fractal, you could trade in between moves as well. So now I know that this is my vantage point or this is my point of interest for a buy. So if my point of interest is 36.52, all right, whenever the sell pattern presents itself, I know I can sell down to 36.52. All right. And that's a lot of money to be made. We talking we talking 350 pips. All right, just from where the market is right now. And I might be able to get in a little bit higher than where I'm at right this moment. All right. So that's what I'm looking for to start the week, man. Nothing too difficult, honestly. More bullishness on Nas. Very simple. Let's wait for Nas to drop down. We could possibly get a sell opportunity up here. We got to see closer to the London session. Don't take it now. It's just 6:30 or 6:52. It's 7:52 on the East Coast. It's not time to trade yet. Closer around London, midnight, 1 a.m. If the market is approaching these levels the way it's supposed to, I'll definitely be in the market looking for a sell, at least to this point right here, possibly even lower, but at the very least to this point right here. Once we get down here, we'll be in the market looking for some potential buys. All right. There is a chance that we'll overshoot this zone. So again, if that happens, you just simply, look at it from a perspective of that's your first swing, right? Or that's just first down. You still got second down. You still got third down. One thing that I tell my team a lot is if you want to look at where are my resources. Where we at? All right, so I look at it like this: option A and option B.
So today I want to talk a bit about premium and discount array zones, right?
My fault.
And I also want to talk about, the different time frames that supply and demand can appear on and how they have an effect on the markets. Because
there we go. My fault. So I just look at it like an option A and option B setup. All right. So this will be my first attempt. This will be my second attempt if I happen to get trapped. And if this don't happen, more than likely I won't trade. But if I have to take a third attempt, I'll take a third attempt. So this is pretty much the only two ways the market gonna move. If you are right in the direction, if you have the proper direction, it's gonna move off of option A or option B. So that's why when I come back to these charts here, okay, it's either gonna react from here, or if I slightly overshoot this level, it'll react from here. All right. But either way, I'm gonna be prepared because I'm not gonna over leverage and stuff like that. All right. So simple and plain is put. Going bullish on Nas so far as GU. Again, I look at the market continuing to go bearish until we get down to this blue zone, like 339, 338, around there. Like anything under 1.34, I feel like it's valid. Euro USD, same thing. We're gonna continue shorting. We're gonna continue shorting till we get to our level. This level is kind of suspect to me. I'm really looking at 1.17 and below. So far as gold is concerned, this wick up here, I know that wick gotta go. All right. I don't have faith in that wick long term. It's just where do we buy from, right? So me personally, I'm not gonna buy up here to go attack that wick. I would love to see the market come down to a lower price point where I feel comfortable buying. That's just where I'm comfortable putting my money at risk, right? But overall, I could definitely see us coming and clearing these highs and trading above 3,700 by the end of the week. That's very doable. All right. So with that being said, again, I like to just focus on my peers. But if there's anything else that y'all want me to take a look at, you could drop it in the chat, and that's cool. All right. Can you show us what our if somebody else called it, they probably not going based off of my technique. So my technique is different from other people's technique. So, in terms of a sell, I could tell you if I was to take this sell, I would target, 36.52, but I don't really know what they're seeing. So I can't tell you necessarily. Do you trade larger lot sizes looking for less pip movement? Nah, it's not like a 10 pip and dip. It's not like that. I still go for big moves. I just execute on lower time frames. So like my execution is on the 1 minute, but I'll still go for like a 1 hour, 4 hour target. You know what I'm saying? It's just the execution. That's it. I'm waiting for it to take out the low so I can start to buy on GU. Okay, bet. Take a look at oil. All right. You got some oil traders in here. You don't run into oil traders too often. Um, it was on my favorites. I think I took it off. Oh, here it is. You don't run into oil traders too frequently. Have y'all been trading a while? What got y'all trading oil? I only know a handful of people that actually trade oil. Okay, so with this impulse here, I definitely got it returning bullish eventually, right? I got it returning bullish, but before it returns bullish, before it returns bullish, I feel like it's gonna come and I have to complete my 2-level sweep first, right? So again, we got consolidation right here. This will be my first level. So we purge this level here. Then we purge this level here. Once I purge 2 levels of liquidity, then I'll look at the market to go and clear out that impulse with no hesitation, right? Whenever I see an impulse without hesitation, it's a false move in my eyes, right? Argue with whoever you got to argue with. That's the way that I look at the market. Same way you see the market push up bullish. You see a bullish impulse with no hesitation. Market does what it has to do. It consolidates, does what it has to do, but eventually that area gets destroyed, right? So I'm looking at the same thing here. I'm looking at all of this price action that needs to be filled. I see weak highs up here. I don't see those as strong highs, but I do see the market consolidating. So as we continue to consolidate, all right, I'm looking for the market to purge. All right, this first level, second level. Once we get down here, good chance that we may react from this zone. Okay. And if we react in this zone, boom, we good. All right. So what has happened this week? I don't really know. This is the 4-hour chart. You know what I'm saying? This is the 4-hour chart. So just on a lower time frame perspective, let's see if there's anything that I can pretty much go off of. I'd say we're gonna start. I say we'll start bullish. Ideally, if I can, I'd love to sell above here, right? So just looking at what the market is doing, okay, we got a little hesitation here. Check this out on the 15. Okay, so we got a couple of decent reactions, right? So this could be a first level sweep. Could be, right? Could be. So I would look at this little area consolidation, bringing in buyers. Then we sweep that level, sweep this level over here, okay? So if this low decides to hold, I can see the market going bullish to clear out these highs and to come into this hezzy up here, okay? So this hezzy creates internal range liquidity for the sell side. And once we come hit this, ideally, that's what I like to see, okay? Now, I know somebody might say, well, these lows don't look great to take buys from. That's the point, right? Because at the end of the day, this buy, I don't plan on this buy making new highs, right? So if it's a short-term buy anyway, you don't necessarily need all of the confirmations to be perfect, right? Because typically, this isn't like an area that I'll probably buy from. But at the end of the day, it has enough characteristics. It has a sweep of the low, you have a little imbalance, right? The market does have a small hesitation here. So it's like it's not perfect, but at the end of the day, it's short term anyway. So I look at this to be a short term buy. We get up to about $65 a barrel, then we sell. All right, to clear out all of this noise, all of this mess. All right, and once we clear out this level and this level over here for the buy side internal range liquidity, this is where I have the market returning to make new highs all together, okay? And then coming back for this level up here. All right, so that would be like my outlook on oil, but I think we'll start off bullish for the first, day or two. Then we'll probably start heading back towards, $60, $59 a barrel before we start a long-term buy projection. All right. What else I got for me? What else I got for me? Talk to me, talk to me. Any other comments, questions, concerns? Definitely appreciate y'all for tuning in with me. So we got to do on a Sunday just to make sure we're properly prepared to have a monster week. If you feel like you got some value from this call, definitely, take a quick boomerang, quick screenshot or something, show some love, let the people know what it is that we got going on. If you got any comments, questions, or concerns, feel free to reach out to me. You can definitely send me a DM here. If you're calling in for free, enjoy the free call. I'll see y'all next week. If you want to trade live with me on a daily, feel free to DM me here, and you guys can be a part of my live trading sessions, right? So, if you want to get in touch with me, it's best to DM me on IG, and we can figure out a plan to work together and get you profitable right away. Okay. So other than that, I don't really have nothing else. Any other comments, questions, or concerns? Anything else I can do for y'all? Of course, of course. No problem at all. No problem at all. No problem at all. All right, real quick before I go. Um, real quick before I go. Some of y'all have been hitting me up saying you was having issues with your app trader, and I'm gonna be honest, I don't use that. Um, like I'm honestly, I hate seeing y'all struggle with the platform and whatnot. So if you guys do need a good broker, I mean good, I'm talking, you know, solid brokers, regulated brokers. AAA this is regulated, okay? And not in America, but it is regulated in Greece. Now, when it comes to brokers, you're looking for brokers that are regulated in the first world countries. That's what you're looking for. Only reason it's not regulated in the United States is because that wouldn't give you no leverage. Okay. That wouldn't give you no leverage. Okay. Um, in terms of trading, you'd have to put in $10,000 just to make a decent amount of money. Okay. So if you guys want a broker that's regulated in what do you call it? In a first world country has good, leverage and stuff like that, you can use that. Now, another broker that I personally rock with is CoinX, right? They treat me well. This broker has the tightest spreads in the industry, right? Like when you trade in gold or say you trade in EU or GU, these pairs literally only have a micro pip spread. So that's the smallest a spread could possibly be. Okay. So that means where you get in is where you get in. You're not gonna get in one place and then the other stuff. And hold on, let me get this. So you're not gonna get in one area and have to deal with a bunch of nonsense, right? So CoinX, this is my other broker. So this is the broker that I actually, made this little bag on. So so you can see for yourself, like, because again, I see a lot of y'all having issues with certain brokers, right? So it's like I'm able to make a lot of money just with this broker without having issues, right? Supposed to be a video, but it ain't playing for some reason. Anyway, you can see the video on my Instagram page. Just go look at it. And you can see like there's no problems with the execution and stuff like that. If you guys want solid brokers you could use, right? So AAA FX or CoinX, both of those are really good. All right. One is called AAA FX. The other is called CoinX, right? CoinX has the tightest spreads in the industry. They also have a 400% deposit bonus if you put in $200 or more. So that means, say, if you put in, I'm just throwing a random number. If you put in 1,000, they'll give you an extra 4,000 to trade with, but you have to use the code Ray Trader Boost. Okay, and I also give you the instructions for the deposit bonus on AAA FX because both of them have deposit bonuses. And again, I'm telling you all this like again, I'm not here to try to poach you from one person. Like, look, if you happy with Hanko, do what you do. It's your money. Like I can't force anybody to do anything. But I do see some of y'all complaining just about the execution on Act Trader. So it's like personally, I don't want to just sit back and watch y'all struggle if I do have an alternative. You feel what I'm saying? So for me, like this is the broker that I found to be useful and beneficial for me. Okay. So these are the instructions for AAA FX. They've been around for 18 years. They make 8 figures a month, so they can pay you regularly. Obviously, they book your trades as well. Raw spreads. So the spread's not as tight as CoinX, but they still good. They still like a pip or less. So it ain't gonna be nothing crazy. They can give you a 300% deposit bonus. So and these brokers use MetaTrader. So the biggest issue with Act Trader specifically